Imagine being woken up by a call at 2 a.m. from the fire department, learning that your short-term rental property is flooded. That's exactly how our nightmare began.
I do remember that dark day when our brand new house, heading into busy season for the rentals, was completely flooded with the entire main level floor destroyed and the entire beautiful finished basement just completely destroyed by the guest.
Our custom-built home, painstakingly designed by me and built from the ground up, not by me, from our builder, nearly destroyed in a single night. What saved us? Proper insurance.
You decided, hey, I need an insurance policy for my business. You're not going to call State Farm or Allstate or Nationwide, USAA to get a product, right? They don't have the product for you. So this whole world of program insurance is basically where guys like me and my partners get together and we go out and we develop a specific policy for a niche industry.
What makes short-term rental homeowners insurance more expensive, and is it worth it? By the way, it's worth it. We're speaking with the co-founder of Proper Insurance, Darren Pettyjohn.
That combines all three. So we think of it as a homeowner's policy, a landlord policy, and a commercial policy all wrapped into one for the short-term rental owner. And then we added a lot of endorsements to strengthen the coverage. So we went against the grain, and it was a really tough decision, right?
I'm 30-time Airbnb superhost Jason Muth. I worked in the media business for over 25 years. And in 2016, we started in the world of short-term rentals as our Chapter 2. Since then, we've welcomed over 5,000 guests and their furry friends to our homes. And now we're here to show you how to make a smart stay. Now, here's a conversation with Darren Pettyjohn. Okay, Rory, it's story time right now. Are you ready? I'm going to bring you back to a dark period of our lives. One dark day in March of 2024, we got a phone call in the middle of the night from the fire department in Farmington, New Hampshire, asking if I was Jason Muth, and I said yes. And they said, we are at your house. The house is flooded. And that was not a fun conversation to have. And I alerted you to the conversation. And what did you do, Rory?
I mean, I just picked up, it was 2 a.m. It was pitch black out, but I ran into my car. I tossed into my car a wet vac thinking that might help in some little teeny way. But when I got there, it was absolutely of no use. But I do remember that dark day when our brand new house, heading into busy season for the rentals, was completely flooded with the entire main level floor destroyed and the entire beautiful finished basement just completely destroyed by the guest.
Yeah, literally a house that we just built the previous year from the ground up with a builder, picked out all the finishes, a custom built house. And it was the last thing that we had expected would happen because we've never had this happen before. But the case for great insurance really kicked in at that moment. And we are so fortunate that we have the co-founder of the insurance company that we proudly work with. And this is not a paid episode by any means. This poor company has paid us more than they probably have cared to deserve, but we really much appreciate it. This is Darren Pettyjohn. He is the co-founder of Proper Insurance, and they have a couple of sister companies, Wavo and Worcester Insurance. We'll talk about them as well. But Darren, welcome to Smart Stay Show.
Thank you. Yeah, really, really excited to be here, and glad that Proper Insurance came through for you.
Proper Insurance came through for us in more ways than we could even imagine. And what Rory and I talked about this, and we have influence in the short-term rental world, both with this podcast and in the short-term rental secrets mastermind that we're in, and some other areas. And throughout the claims process, I kept telling Rory and everybody else, I'm like, I really hope that one of the resolutions here is that we're going to walk away and just be singing the praises of Proper Insurance and just extolling the virtues of working with a company like that and saying, we are so grateful that we worked with them because of X, Y, and Z. Like we were, as we were working through the claim process, that was what we saw at the end, that we're like, man, I hope this is how the outcome's going to be. And it is 100% how the outcome was. And we're grateful for you and the company you found and the insurance that you provided for our home. And you saved a lot of like mental energy and probably anxiety
Mhm.
that would have kicked in this year had we not had a company like Proper Insurance involved. And again, as listeners, this is not a paid episode. This is legitimately the company that we work with for insurance. And we didn't even reach, I mean, like somehow our people got together to get you on this podcast. I was talking to some people on your team, and eventually
Right.
the invite worked its way up all the way to the co-founder. And here we are to thank you personally, but also to learn more about why having a company like Proper Insurance is extremely important if you are an owner of a property that you're doing short-term rentals. So, with that, like, my God, like, I'm hoping that was a good intro. I know you've been on podcasts
Great
before, but I don't
intro.
know how many people have been customers of yours to this
Right.
level.
Well, we've written over 150,000 policies in 10 years. And we, from the claim side, though, real quickly, Proper is unique in a sense that we have what's called in-house claims administration, which means we get to control our product basically from start to finish, right? So I was flashing back 10 years when I built the first website in the spare bedroom of my house, and it was me, and I was looking at my cell phone, and accounting and finance and customer service and for everything rang back to my cell phone, right? The classic entrepreneurial story of building the first website. But we sell the product, obviously, we market it, we sell it, and then we have what's called binding authority. So we actually underwrite the product and then we issue the policy. And that's where most companies drop off. They actually will farm the claims out to a third party administrator. And this is very common for even State Farm, Allstate, Nationwide. It's just there's too much volume, right? And so they will outsource that piece of the business to another company that specializes in that. The problem with that is the TPA, or the third party administrator, doesn't necessarily have the client's best interest, right? I mean, their job is to sort of mitigate these claims, and yeah, they'll go by the policy language, but more times than not, when you read these reviews online, unfortunately, of domestic insurance carriers, you see a lot of negative reviews. It feels like, well, hey, where was the sales guy I talked to, and where's the customer service and all of that? And so we got approval from our carriers to actually administer our claims in-house, which is a really big deal. So then a client like you, who then eventually files a claim, we control that process as well, which is really cool. So we control the brand, as we call it, from start to finish. It's a pretty unique thing, though, in the insurance space. Yeah, it's pretty awesome.
I kind of want to start where I think the big differentiator for this product that you have is, and that's working with short term rental owners and operators. I think a lot of people probably started off similar to how we did, where we had a second home, we insured it as a second home, and then we kind of at a certain point crossed over and really needed to have this kind of specialty coverage.
Right.
How is a short term rental owner's policy different from a standard issue homeowner's policy?
Yeah, it's a great question, and it's really goes back to the origin of the company, right? So if we go back 10 years, it's important to understand what program insurance is, right? So if you go buy car insurance or health insurance or life insurance, these are really commodity insurance products, right? But then let's say you owned a whitewater rafting company in Colorado, and you decided, hey, I need an insurance policy for my business. You're not going to call State Farm or Allstate or Nationwide, USAA, to get a product, right? They don't have the product for you. So this whole world of program insurance is basically where guys like me and my partners get together and we go out and we develop a specific policy for a niche industry, right? Golf course, winery, bed and breakfast. Well, it happens that my business partner was the largest insurer of bed and breakfast properties years ago. And he started to see this home away thing, right? Pre VRBO, pre Verbo, pre Airbnb. And we started looking at it and we were like, there really needs to be a program for this, right? There needs to be a product specifically for short term rentals. And the reason is the occupancy of the product, right? So you really only have three options if you were to contact, say, State Farm. The first option would be personal use of the property. That's a homeowner's insurance product. Many of us are homeowners and we buy a homeowner's policy for the place we live, where we reside, where we get our mail. So that contract way back 100 years, 50 years, was constructed in a way to cover a personal residence. The second part is what's called a dwelling or a landlord product, right? And that is your traditional long-term rental where you don't live at the property, you rent it out, right? It's an investment property. It's not the place you live, you rent it out. And then the third type is a commercial product. So that would be business insurance, which has a little bit more horsepower than a dwelling or a homeowner's policy, right? But the problem is with short-term rentals is you really sort of need components of all three. And the first example I use is a lot of people who own a short-term vacation rental will use it themselves for a period of, say, a month or 2 weeks out of the year. They say, hey, let's vacation there for the 4th of July. Well, what do you do at that point? Do you buy a homeowner's policy for 2 weeks and then cancel it and then buy a dwelling product for the rest of the year? Potentially you could, but that's an exposure there, right? So we started to realize the multi-use of these properties, right? It's sort of the modern investor. You may run a short-term rental for 6 months and then say, you know what, this isn't working for me. I'm in a college town. I'm going to rent to college kids for 6 months. Well, now you've sort of transitioned over to a landlord product, right? Where they live there, they're a landlord. So it gets really messy really quick. And so if you look at all the products, none of them were constructed in a way to 100% cover a short-term rental. So what we did, and bless my kids' college fund, though you need one home run in life, right? We put together a product that combines all three. So we think of it as a homeowner's policy, a landlord policy, and a commercial policy all wrapped into one for the short-term rental owner. And then we added a lot of endorsements to strengthen the coverage. So we went against the grain, and it was a really tough decision, right? If you watch the Super Bowl, or when you watch the Super Bowl this year, you will see 5 insurance commercials, and all of them will say switch and save, switch and save. And the reason they can do that is insurance is a product that you don't use, right? When you buy tennis shoes on Amazon, you use them. When you buy a car, you use it. When you purchase insurance, you put it in a drawer, and statistically, you're going to use it once out of every 9 years for a homeowner in the United States. So switch and save, switch and save. It's almost a necessary evil, right? So we went against the grain. We said, switch and pay more and get better coverage. Not necessarily the easiest thing to do, right? But it worked. And I'm proud to say 10 years later, we maintain about a 30% close ratio on everyone who quotes with us. And just a couple quick examples of cool things that we were the first company to do in the history of insurance. We added on bed bug coverage because this was a big hot point in the industry, property and liability coverage for bed bugs. We were the first to introduce squatters insurance. When COVID hit and that craze was going on and people were kind of switching to the midterm rental, if you will, the people who were working remote, there was a need to create a unique endorsement for squatters coverage. And arguably the biggest one we did, the biggest fundamental endorsement, was no limit on damage caused by a guest. That's a big one. Think about it. I mean, you're entrusting your property. You guys have one. I mean, heaven forbid, hopefully it never happens. But if somebody went into one of your rentals, threw a party and put, trashed the place, 100, 200, 300,000 in damage, we have no limit on damage caused by a guest, which again is unique only to us, but we pay a lot more claims. So the only thing you see online against proper and negatively, if you will, is that we're expensive. And we are. We're the single most expensive insurance contract out there for a short-term rental. And, 1 out of 3 people, like you had stated, feel like it's a good investment to upgrade their coverage. And 2 out of 3 kind of roll the dice.
I think it's important to note that you lean into that, right? You say out front, we're going to be more expensive. And I was aware of that when we decided to switch over our standard policy that allowed some type of short-term rentals for that home into proper. I believe the first policy we did is when we bought a house, a new house outright back in 2022 was that purchase. And we went right to proper because I was learning more from the short-term rental secrets group and the name kept coming up. So we just went for it and said, hey, listen, I want to invest in this house. And this company is the one that is built to support me and how we're going to use this house. Let's see how it goes. And, that policy was in place in the fall of 22. We haven't really had to use anything, knock wood, with that policy. But then we quickly decided to switch everything else over into proper after just, a few months of working together, despite the cost. And what I do see the same stuff that you see, like the knock that people give proper is that it is more expensive. But I always respond to that and say, you get what you pay for. And I actually went through the whole process from start to finish with you guys. And there wasn't a single point of contention the entire time. Right. And we felt like we were honest as much as, like we gave as much information as we had. We felt like your team was honest back in terms of what you were going to pay out. Our builder felt terrible about the entire process, but he got paid again, right? Because he just built this house. And I gave him a phone call. I said, hey, man, Rick, what are you doing this spring? I'm gonna have to rebuild a little bit. So, so he
Right.
got paid. He got paid again. He felt so bad though, but just knowing that the insurance company kind of had our back, which is not something that I've really had to deal with in the past, and hopefully we'll never have to deal with again. It really helped that process move along, and we documented the process and photos, video, writing, and like literally 3 months after it all happened, everything was back in order. Everybody got paid, and we just you don't miss a beat, and that's why we have proper insurance. And if you're listening to this wondering, geez, you keep talking about this, you should pursue them. You should take a look and see if you're running a short-term rental property. First of all, you're probably not covered the way you think you're covered with your current policy. Like without knowing exactly what your policy is, you're probably not. So, it's certainly worth having a conversation with a company like Proper who will point out the flaws with your current policy. I remember doing that with, the first person I contacted at Proper. But, claims like ours, this was a 6-figure claim. Like, how often are you getting those phone calls from your 150,000 policies you've written?
Yeah, and rising. I mean, it's a lot. I mean, but again, statistically, it's a little higher with short-term rentals than 1 out of every 9 years. I don't have it off the top of my head, but I would say it's more like 1 out of 7, right? So in 7 years, you're going to file an insurance claim, right? But we have drownings in swimming pools. We paid multiple $1 million lawsuits, unfortunately, for, wrongful death suits. And we've had people, I'm trying to fall downstairs when there's no railing. We've had total losses from forest fires and kitchen fires. Barbecues are a huge one. Please don't put your barbecue up next to your house underneath the awning. I mean, it's a disaster waiting to happen, right, with the guests. We see a lot of, water damage from number one claim is wind and hail. It always is, right? So you think of like Florida and hurricanes and stuff. Wind and hail is the number one claim. Number two, from a financial standpoint, is water damage, which you know a lot about. And I always laugh and say water created the Grand Canyon. When water gets in your house, it destroys everything, right? And that's anything from backups to sewers and drains, to toilets, to broken water pipes, to roof damage and rain, and on and on. Water's a big one. Third would probably be fire. 4 would be damage caused by a guest. So we see a lot of them, but we collect, hundreds of millions in premium, and we pay out, millions and millions in claims every year. And that's the nature of the game. But to look at the spread just from people who say, hey, insurance is the big bad insurance guys, right? The spread in the loss ratio for Lloyd's and Concert and the carriers that we work with, it's not that big, right? It's not like they're making a 40% margin. It's not like they're taking in $100 million in premium, paying out $60 million in claims, and then walking. what usually happens, and a lot of their money comes from the investment income that they receive. So let's think of, okay, I get 100 million in premium and I put it in the S&P 500, right? Let that baby roll. And then when I have to pay the claims, I'll pay the claims. So it's not a huge spread. And then there's the agency. We get paid, of course, a commission and different things, but it's not like the insurance companies are just raking in the dough and taking it to everybody, right? We can pay these claims and maintain these great reviews because we charge more and we don't have to fight people, right? It's a different school of thought. I'll give you a great example. So something that insurance carriers are sneaking into policies now without policyholders really knowing is actual cash value on your roof, right? So hail damage is a huge thing. We have tons of hail damage statistics and models and what rates we need to charge. Think of the Front Range of Colorado, right? I mean, those storms are coming. Those hailstorms are trashing roofs. So you have a brand new roof. Let's say you replaced your roof. The life expectancy of your roof is, say, 30 years. And a hailstorm comes through. And let's say your roof is 15 years old. 30-year life expectancy. The roof is 15 years old. You get your roof replaced. It's $40,000 to replace your roof. The insurance company is going to cut you a check for 20 because they're going to calculate the depreciation of the roof over those 15 years. Because the idea of an insurance is to make you whole again, not better off than you were, right? So technically, if the hailstorm comes through and my roof is 15 years old, I get a new one, I'm actually better off than I was before if I have a brand new roof, right? Well, Proper doesn't do that. We pay what's called replacement cost valuation on a roof. So even if your roof is 15 years old, hailstorm comes through, damages the roof, it's 40 grand to replace, we're cutting you a check for 40. So everything we do in the product is the best that can be. So again, not something you'd think of, right? Oh, I have actual cash value on my roof, whatever. I don't even know it's in my policy, right? Here's another even bigger one: water damage limitations. So speaking of your water damage claim, you said it was in six figures. Tons of our competitors are now capping water damage claims, sometimes 10, 25, 50,000. Well, water damage, we had a $400,000 ice maker leak damage claim in Utah. This beautiful house in Utah, on the ski hill, like 10,000 square feet. Little ice maker went for a week, dripped down the whole. It was a $400,000 claim on a leaky ice maker. Now we will subrogate some of those larger claims back to the ice maker to try and recoup some of our money, of course. So subrogation is a behind the scenes thing that we do sometimes. But they're massive, and these are sneaky little things. So think of a boardroom and they're going, okay, we need a bigger spread here. What are we going to do? Well, let's put actual cash value on the roof and we can save $100 million next year. And, nothing against domestic insurance carriers, but no wonder their reviews are 1 out of 5. I mean, it's crazy, right? And it's like they're sneaking in these things that consumers just don't understand because it's like reading contract law. It's a 100-page contract and it's worded very, difficultly and people just don't know what they have. So that's the brand. We always say, protect the brand, protect the brand. And I'm proud to say that in 10 years, I think coming on 11 years, we have maybe 20 negative reviews in 10 years. For an insurance company, that's unbelievable. And I've personally dealt with every one of those. As the original guy, I came up with the name, built the website, did the whole thing because it's just that important to us. Right now, if it was 5 a day, I would be overwhelmed. I wouldn't be able to do that. But that's the culture we've created, is protect the brand, find coverage for the customer. And if we need to raise rates, we'll raise rates to cover everything. But we want to offer the best product, that people can buy, that want to upgrade like you, that are willing to spend a little more for insurance. So.
You just alluded to things that insurance carriers do that might be sneaky, but I want to ask something kind of the opposite that homeowners might do toward insurance companies that is a little sneaky. As legal counsel to short-term rental owners, I know there's a temptation to just tell the insurance carrier that this is a second home and accept the limitation that they can only rent it out 14 or 60 days a year. And they are misrepresenting, either knowingly or just, they get more bookings they intended, but they're misrepresenting the use of the property to the insurance company. And I haven't yet seen it blow up in somebody's face, but what do you think about the risk there, that if you misrepresent your intentions to the insurance company, how can that come back to hurt you later on if you do have a claim?
Well, it's void because, to your point, if you pull up any homeowner's landlord commercial proper product, there's a misrepresentation clause in the policy. And so if you misrepresent anything during the process of purchasing the insurance, to your point, technically they could void that policy, right? Now, again, does that happen all the time? Probably not. Most likely a claim may be paid or settled for a little bit and then they would cancel you. But I can tell you there's a really interesting case out there I found years ago, Emily Richer versus Travelers Insurance. It's public domain. It's on the internet. Where Travelers was going out and denying claims when they found out that the property had been rented on a short-term rental platform. So this gal, Emily Richer, had a tree fall on her house. Wind is the cause of loss, right? Because you always have to start with what caused the loss. It's not a tree loss. Wind caused the tree to fall, which then damaged the house. $100,000 claim. And they found out that she had a listing on Airbnb and had rented the property for 14 days, and she hadn't notified the carrier, and they flat denied the claim. Then she obviously came back and sued Travelers, and I didn't follow it all the way through. So it does happen. I mean, this stuff is out there where carriers will, try and get out of claims. We actually are about to run a big claim denial on damage caused by a guest, where I believe it was a 6-figure claim and the carrier denied it. And our new client, the person who is a client now, is so upset that they want to go out and tell their story, because where the confusion comes is vandalism. So a lot of your listeners may even pull out their insurance contract right now, and then the first couple of pages is what's called your declarations page, which is like your table of contents, right? To give you a snapshot of what you have. And what they see is vandalism. And they go, "Oh, I have vandalism coverage. I'm good," right? Well, you're not good. So vandalism is kids walking by and throwing rocks and breaking your windows. That's a vandal. That's vandalism, right? Damage caused by a guest is not under vandalism, because there's a tricky part in the contract that states when you entrust your property to someone else, okay, which you're doing with a short-term rental, you're giving them the keys for a week. There's no protection for criminal acts committed by that person you've entrusted your property to. So is vandalism a crime? Yes, it is a crime. It's not a civil deal. You can go to jail for vandalism, right? And so if they trash your place, there's no coverage, and there never has been. And so people get really confused on that, where they say, "Oh, I'm good. My agent told me I have vandalism coverage." You have vandalism coverage. You don't have damage caused by a tenant by a person you gave the keys to. Completely different deal.
So there's multiple companies involved that you're a co-founder of that are kind of connected. And I want to talk a little bit during the time we have left about those other companies, because we could probably go on and on about Proper, and we'll definitely have, more insurance conversations on this podcast in the future. We have a co-hosting business called Pride Away Stays, which is separate from the homes that we own. And, we made a phone call to Worcester Insurance, which is, I believe, your sister company or cousin company, whatever, however you're all considered. And I said, "Listen, we have proper coverage. We're launching a co-hosting business. I want you to cover us under there." It was one phone call. I didn't shop around. I didn't need it. It wasn't worth my time. I trusted you from Proper. And then we have the Worcester policy. And the other one that we have is through Wavo, which is guest damage protection. And I'd love it if you can kind of explain what those two companies do and how they differ from people that own their properties and have guests staying there on a short-term basis. Sometimes those owners might want to co-host the property down the street, right? They want to,
Right.
They're on a lake, they're doing a great job. Their neighbor says, "Hey, can you manage our property as well?" Where does Worcester come into that? Where does Wavo come into those conversations?
So I'm proud to announce, and this will be on this podcast, we just received approval from Lloyd's for our own program with Worcester. So the product you have right now is through probably most likely Westfield. It is a carrier. So we're a broker at Worcester, right? We don't have our own product. And we were going to test drive it for a while, and it's a good product. Don't lose sleep over it. And you'll be rolled over to our new product when you come up for renewal. But we tested it out, and we have our own program now, which means we have the pen, which means we underwrite, we issue. We're going to do it all, man. And we're so excited for Worcester. So the where Worcester falls in though is at the end of the day, proper's easy, right? All of these properties in the U.S. have a deed. Someone owns them, and you need home insurance. Proper, it's pretty straightforward. Well, as a professional manager, you have a lot of exposure that you may not realize, especially when you do 3, 4, or 5 properties. You think, oh, okay, no big deal, right? Well, you need a business policy. It's a business policy for your business. And it has a couple unique coverages. It has a core foundation, and then you can offspring from that. But the core foundation, the first piece is commercial general liability. So that CGL, that commercial general liability, will extend out to the properties you manage, which is a big deal because if you get pulled into a lawsuit, and think of snow, right? Well, you manage the home, you're supposed to shovel the driveway, you didn't shovel the driveway, someone slipped and fell. They're going to sue the owner. They always sue the person who owns the property, but they're going to pull in the manager, right? So you need insurance for that. Or the homeowner can come back on you. It's all hunky dory when everybody's making money. But let's say that you convince somebody to short-term rent their house. They go for 6 months. They go look at their house and they go, oh my God, there's scratches in the front door. People are bringing in suitcases. There's nicks, there's bumps, there's bruises. There's a lot of high turnover. I didn't know it was going to be like this. I don't want to do short-term rentals anymore. I'm going back to long-term. Well, they decide to sue you for diminished property value. They say you trashed my house. You were not upfront with me. And you can get sued for anything. So again, diminished property value, where does that fall? That falls under E&O. So the core of the product is CGL for your business, and then professional errors and omissions insurance for your business. E&O, the two big pillars on that would be tenant discrimination, in case someone files a tenant discrimination suit against you, and then diminished property value, right? But here's another example. So let's say you're managing someone's house and they don't have proper insurance. They don't have the right insurance. And a guest overflows a toilet and there's a $100,000 property claim. They go to file that with Travelers. Travelers says, well, we didn't know you were short-term renting. We're denying the claim. They don't have any other recourse. And they go, well, you know what? Let's sue the manager because the manager is the one managing it, right? That would be property damage you were liable for as a property manager. Your CGL would actually respond to that because people forget, right? They think liability, bodily injury. It's property damage or bodily injury you could be liable for as a business. So again, you're a co-host, you manage 5 homes, everything's going great. Oh my God, I have a terrible relationship now with this homeowner. Their place was trashed. I can't believe it. God, I hope they have really good insurance. I hope they don't come after me. Haven't heard from them in 2 weeks. All of a sudden, you're served a complaint about $100,000 in property damage that they're saying you're liable for, bud. You're the one that gave the keys to the people who came. You're supposed to screen tenants. You didn't screen tenants, on and on and on. So we're really excited about it. We're planning to sell a lot of this. It's very competitively priced, but that's kind of the core. If you're managing homes, you need an insurance policy with your name on it. You're a business. And then Wavo obviously is the damage protection. Security deposits have become a friction point, obviously, for travelers and such. And so we launched Wavo a couple of years ago, and it's been great. We have some big partners, and then some managers and even smaller clients. We have a little portal online where people can buy it. But do not sleep on the commercial package policy as a professional manager. It's a big deal, and you should have that insurance.
I think every insurance conversation I have with someone at your company just gives me a list of things I should be scared about, to be perfectly honest. But, I think that's having the protection, I think, is the good thing. But, you guys are always out there just, throwing situations that we as homeowners or property co-hosts and managers have in our head. We're like, oh yeah, I guess that could happen.
Well, it's a transfer of risk, right? I mean, insurance goes back to the 1600s with coffee shop in London and gold coming over and tobacco, and they were losing the gold and tobacco to weather and piracy. And a group got together and kind of created this idea of transferring a risk to an insurance company, and that's what you're doing. Hopefully, that never happens. Any of those things: discrimination, bodily injury, property damage. But that's what you're doing. You're transferring that risk to a carrier, and you know, that's the whole idea, right? And the reason we bring the examples up, and you probably laugh, Jason, because they just roll off for me, right? I'm very intimately involved in this company. We're 170 employees now, and it started with myself, and I see and hear, and every day I get a claims report at the end of the day. I just like to scan it, and just see it and see what's going on. And we see it all, unfortunately. So
Yeah, I mean, it's people like yourself, people like us that, we've hosted so many guests that, you know, 99% of the time, nothing happens. It's uneventful. Like most of your customers, you probably barely hear from. And then there's the 1%, the 2% that just stand out in your head because that's the situation that caused the story for the podcast. It's like, I always give the analogy of, reffing or umpiring. Like, you don't remember the 99% of the calls they got right. It's the 1% they screwed up on. And you run your business where you're collecting from a lot of people where it's just completely uneventful, and we put the policy in the drawer and we hope to never use it. But the
exactly.
1% leads to the stories and leads to these types of situations. Rory, any final thoughts for Darren?
No, I mean, I just don't want this podcast episode to come across as a commercial, but again, as legal counsel, when I talk to people, sometimes it's nice to know what the experience is. I'm not glad that we had to go through the experience, but it gave us a lot of insight as to what the process looks like, what it really feels like to have the short-term rental property get badly damaged, and the real value that it comes having the right insurance for it. I mean, it covered lost income. It would give us no grief for having a short-term rental in there when the damage happened, and it fixed the damage. It was more expensive than a standard issue policy, but it fit us, it covered us, and I can not only know the value, I feel the value having gone through that experience.
Thank you. That's really nice to hear. And we've put a lot of work, blood, sweat, and tears into this company, like all entrepreneurs, right? So yeah, it's great to hear that. Thank you.
Yeah. And the work that you did to build up your company to where it is right now, on a much smaller scale as real estate investors, we build our portfolios up, we build up our co-hosting business. We're proud of the work that we do. It's allowed us to live the life that we have. And, when setbacks happen, like, floods that are caused by a guest, it rattles you, right? It's just like in your business, stuff could rattle you, but, it's always nice having, assurance that you're working with the right companies that can kind of just keep you focused and keep you going down the same path. And, we barely missed a beat, frankly. I mean, with that, sure, there was a lot of extra work that we had to do. And by the way, I put 5 generators in, actually 6 this year, like as a result of that. I'm like, this is never going to happen again, because it was connected to a power outage that happened. And I'm like, I'm just not going to risk it. So, it led to additional work that we put forward, but we saw that as infrastructure and investment in our properties. So just like an insurance policy is, it's an investment in the work that we all do. One last question I have. If there was something that you think back to when you started the company, is there something you learned along the way that you wish you knew back then?
Something I wish I would have known when I started.
Yep. At the very beginning that you learned along the way.
Well, I guess I kind of knew this, but I wasn't confident in saying it maybe in public, but hands down, the most difficult thing about building a business like this is humans, right? Is the people that's involved in it. And I say that in a sense like humans are late to work, humans have relationships, humans drink, humans are emotional. It's like you're dealing with 170 people, right? It's a lot. And one thing that I've been able to do throughout the growth of the company, and I mean, that's, I would say, a mid-sized company, is really listening and being kind of the counselor, to be honest with you. When I go into the office, that's why I'm home. I'm working today. I don't work when I go to the office. It's the cycle through of, everyone stopping in the office, checking in, saying hi, how's this, how's that. And you always find a way to create time and have your door open. That's the best thing that I can do for my staff, And I knew that kind of going in. You hear that, you read about it, you're like, oh, you need to connect with your people. But really, that's what I've learned, is that if you treat your people and you listen to them, and if they're happy coming to work, you can, it doesn't matter what industry you're in, you're going to have a successful business. I feel like honestly, I feel like I get about 7 hours of work out of my people a day. And I would argue that most companies probably get 4. And I think the reason is because they like working for myself, Scott, and Mike. We're very personal with our staff. And I don't know what it would be like with a company of 1,000 people. I don't know, but we've maintained that connection with our people all the way through. That would be my advice.
To be able to do that from a company of 1 to a company of 180, I'm sure you'll find the way to keep that value going as you continue growing. Yeah.
Right.
We'll link up all your websites in the show notes here. Again, this was not a paid episode by any means. There's no affiliate links. We're just going to put the websites down there if people are curious about, linking up, getting quotes from you, having conversations. They can go through your standard process. We just hope we added value to some people who are listening to the podcast, who are looking out there to shop for insurance, make sure they're covered the right way. Rory will link up all your information in the website as well, so people could talk about legal counsel, and we'll link up smartstayshow.com in the show notes as well, because we love it if you listen to other episodes. We love 5-star reviews, thumbs up, and your comments. If you want to be a guest in the podcast, you can fill out our form and we'll have a conversation to see if you're the right fit. Darren, thank you so much for all your time today. We really appreciate it. This has been enlightening. It's been an honor to host you because we valued your company, and we're grateful to be able to devote a little bit of time to give you a platform for us to say thanks.
Yeah, thank you as well. Appreciate it.